Thank you for joining us. Today we have with us Manny Ruiz, the commercial insurance specialist. We have Bruce Hill, mortgage loan originator. We have Robert Wallace of Wallace Risk Solutions, also a commercial insurance agent. And we have Sam Dorville, a real estate investor and developer. And we have Marcos Bernacke, also a real estate investor. Now, today I want to touch on the topic of home buying 101, just the do's and don'ts of home buying. I think this will be a valuable information to our audience as far as giving them the basic information, everything from the basic to the more advanced information and everything in between, so we can help those who are thinking about purchasing a home. Today, we have Bruce Hill, who's been in the mortgage business for how long?
It's been for over 30 years. I've been through all kinds of cycles. I've been in the lending space a long time.
If you had to guess, how many first-time home buyers have you helped throughout the course of your career?
God, thousands.
Robert, do you mind opening us in prayer?
Of course. Well, Father God, we come before you, thankful for this opportunity, Lord, to just get some good fellowship in, but also, Lord, just to share some of the expertise, some of the gifts and talents that you've given us individually, Lord. We want to bless others with that same knowledge, information, and experience, Lord, that each of us have learned over the years, and just pray that in all things, Lord, we glorify you, and that your this conversation and the information that goes out, Lord, would do just that, Lord, to bring you glory. We're thankful, and we pray all these things in your mighty and precious name, King Jesus. Amen.
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 So a few things I think is important for people to know when they're buying a house is what should buyers do before contacting a real estate agent? So before they reach out to a realtor, what should they do, Bruce?
Most realtors will not even show them houses unless they know that they're pre-qualified to purchase the house. Everybody wants to buy a house, but they have to understand that unless you're paying cash for the house and you can show proof of funds and the amount of house you're looking to buy that's in the bank and liquid, you need to qualify for a mortgage. That's where I come in most of the time.
How much a person is pre-qualified? What are some of the information you would need to pre-approve somebody?
The borrower's historic income over the last 2 years and his debt and the amount of assets he has available to purchase a home. That's all part of the equation. I work mostly right now based around investor mortgages, whereas Giancarlo is more of the residential mortgage specialist in the group. I've been in the mortgage lending space for 30 years. I've done everything from processing, underwriting, secondary market, compliance, product development. So I can assist and I can help provide information. But when it comes to the residential mortgage space, I really feel Giancarlo would be more of the person who would be more qualified in our Kingdom group to discuss it.
Actually, we're going to have a hotline where people will call in if they need help with mortgages, if they need help with insurance, and if they need help with investments and different things like that. And we'll have a discussion and see who best fits that person, fits that lead that comes in. So the question a lot of people don't know, what if somebody's self-employed? A lot of us here are self-employed. So what would we need to purchase our first home? Being that we don't get a W-2, we might not claim every single penny on their taxes. So how would we qualify for our first home?
There's certain qualifiers. There's a lot of what they call non-QM, non-qualifying mortgage programs available for self-employed borrowers, and they consist of using self-employed borrowers' bank statements to actually qualify them for the income, because their income is going into their bank statements most of the time, that you could show cash flow in the bank. You could still use traditional forms to qualify. I work with a lot of self-employed borrowers that show quite a bit of money. I just closed a loan today on a condominium for a gentleman that was a doctor, and he had an LLC, and he also had personal returns. And we were able to use 1 year tax returns because he was self-employed over 5 years. We used his 1 year tax returns. He was on extension for 2025. So we showed his 2024 returns and his filed extensions with the IRS for 2025. And we used his 2024 returns to qualify him for a $600,000 mortgage that he just closed on today. In fact, I just came from that closing today. So there are numerous ways to qualify borrowers, even if they're self-employed. If they're self-employed and they have an accountant that does what they're supposed to do, which is write off their income and give them the lowest tax liability, then many times we could use P&L statements, profit and loss statements from their accountant. We may be able to use the bank statements for the business or the personal bank statements that they have to qualify and show the cash flow. So there are numerous ways for individuals who are self-employed that don't show their income to get qualified. You just have to know what the programs are and understand. Work with individuals such as myself, such as Giancarlo, that understands what programs are available to help you qualify.
Richard Compton, he does some residential loans also, correct? Yeah, okay. All right. So now that they're pre-qualified, what should the buyer look for in a realtor?
Okay, yeah, just because I mean we're talking about pre-qualification, and like Bruce was saying, buyers get pre-approved for their mortgage before they shop. Generally, coming from the insurance perspective, I think it's a good idea to have at least a basic insurance conversation before they shop, especially here in Florida, because insurability is part of affordability. What I mean by that is, you can have two houses that are the same price on the market, but depending on the characteristics of that home, the roof age, wind mitigation, the plumbing, claims history. I mean, over the life of that loan, over the life of purchasing that asset, those can be two completely different price points over time. And it's important just because, talking about before, what buyers should be thinking about before is they really need to have some of those insurance concepts in mind, because it is going to be a big part of how much they can end up affording down the line.
And in recent times, I'm learning a lot of carriers will not insure the house if the roof is in a certain condition. Before, they'll allow you to say, okay, we'll get some insurance, and it's like, okay, you guys are going to fix the roof, right? But now they need to see the roof fixed. They need certain things done before they even issue a policy. So I think that's a good idea to shop around at the same time you're getting the pre-approval. And so now that we look at insurance, we're looking at the pre-approval. What do we look for in a realtor, Bruce, based on your experience? Because you have direct communication with the realtor all day long. What are some of the qualities the homeowners want to pick in a realtor?
So for first-time home buyers, it's very important that you're using a realtor. First of all, first-time home buyers, they really have to kind of narrow down where it is they're looking to buy a home, whether it's the school system, the crime rate, are they east, are they west? Do they want a HOA? Do they want a pool, amenities? So they have to kind of, it's best if the new homeowner kind of knows where they're looking, and then they want to find a realtor who's familiar with that area, who's based in that area. You don't want to use a realtor from Miami when you're looking for a place in Pompano, because they may not be as familiar with the area as someone who lives and works in the community. So the one benefit I have is I know many realtors. I've made a lot of relations with many realtors, many investors throughout the 5 years I'm here in Florida. And I would never give a realtor referral who lives in, say, Port St. Lucie, a buyer who wants to buy something in, say, Fort Lauderdale. It doesn't make sense, So you really want to find a realtor that like, and trust, and someone who comes with a good recommendation, someone that has a good Google rating, that you can look at them, you can see some of the past transactions, and somebody who's local to the market that you're really looking to buy it. You got to have someone that's familiar with the area, that knows that understands what you're looking for as a buyer and can help you locate that property.
Understood. And there's various loan programs out there, especially back in the day. But now I heard that banks are more stricter as far as approval. So what's the minimum credit score a person would need to purchase a home? And with that question, credit score is one factor, but what type of credit history does a person need? How many trade lines do they need? How old their credit have to be for them to purchase a house?
The higher the credit score, the better, of course. The
Mhm.
deeper the credit, the better. I mean, you could technically buy a home. FHA goes down below 580, but below 580, there's factors, higher down payments, higher MI on the loan. 620 or better FICO is recommended, but
Mhm.
you could buy a home below. I could give you an FHA. There are FHA loans that go to 580 and above. And so with a 580 FICO score, you may qualify for an FHA loan. However, some of the properties that people are looking for in Florida, condos especially, they don't allow FHA financing. So it all depends on it. Really, there's a lot of factors. That's a loaded question. The higher
Mhm.
the credit, the better, of course. The lower the
Mhm.
credit, the more difficult it is to qualify. If you have a bad credit rating, why? Missed payments, bankruptcies, foreclosures. Nobody wants to lend somebody with bad credit money.
Mhm.
So the credit score factor is very, very critical when it comes to buying a home. It
Mhm.
really is.
And how much history does a person need? Let's say a person just opened a credit card, they've been paying on time for 12 months, and they only got one credit card. That's
Right.
obviously not enough history. So typically, how much history does a person need?
Normally, you want to see a 2-year history of
Mhm.
having credit with 3 open and active trade lines. So that doesn't mean you have to have all 3 open and active for 3 years, but you need to have a 2-year history. One card has to be open for at least 24 months, and they want to see 2 other active and open credit lines. So you could have somebody that has 3 open and active trade lines with a 700 score, and you can have someone with a 10-year history with 20 open and active trade lines that have a 520 score. So depending on how you use your credit will determine whether or not it's a high score or a low score.
Understood. Okay, so let's say somebody's looking at a house. How do they budget for, after the pre-approval, how do they budget for their closing costs?
Well, the closing costs are part of buying a home. So
Mhm.
when I pre-qualify a borrower, I make sure I work up the closing numbers to show them what your closing fees will be, whether it's bank costs, title costs, escrow costs, insurance costs. That's where Robert comes involved. I call Robert. Robert, I need a quote. Can you help me with a quote on a house? Can you help me on a quote on a condominium? So all these cost factors have to be worked into the numbers, and they have to be disclosed to the borrower before he starts shopping, so he understands what it is he needs, whether it's his
Mhm.
own money or whether it's going to be a gift of funds from a relative.
I remember my time as a loan officer. This was going back 2004, maybe 2008 or 9. But we would normally tell buyers to budget 5% of the purchase price. Is that a fair number?
Yeah, with insurance being so high in Florida now, it could be higher. It all depends on what the taxes are on the property. It all depends if there's what the insurance is going to be. There's a lot of factors. So those numbers have to really be determined. When someone is looking for a property in a
Mhm.
certain area, we know what the county taxes are in general. Someone may buy a house for $500,000 today, and the last time that property sold was 10 years ago. So the taxes on that property are $2,000 a year right now. Guess what? When they close on that house, they pay 500,000. That those taxes are going up to about 8,500. they're going to base the closing and the escrow statement and the reserves that they need based on what the tax bill is now. But those taxes will go up the following year. So they have to know that. But I just had a guy buy an $800,000 condo. The tax was $2,000 a year. It's not going to be next year. They're not going to be $2,000. They're going to go up. And he knows his payments based today on those current taxes. But in a year, they're going to jump. And they're going to change. They're going to ask him for, because the escrows are going to be short. And his payment's going to change. So they have to be aware of that. And as a loan officer, myself, Jim Carlo, Rich Compton, anybody in the mortgage business, they have to know that I tell everybody everything up front. I don't try and sugarcoat anything and say, you do know that your payment's going from $4,000 a month to say $4,800 next year because your taxes are going up.
Awesome. Okay. So is homeowners association fees calculated in their debt to income ratio?
The HOA fees?
Yes.
Yes, they are.
Okay.
They're always calculated in your debt to income ratio. The HOA fees do not get escrowed into your principal, interest, tax, and insurance payment. Those are always separate. But if there's an HOA on the property, those always have to be calculated into your debt to income ratio.
Okay.
Owning the home.
So that changes the pre-approval a lot in most instances. When somebody's looking for a certain property, if the HOA fee is at a certain level, that decreases the amount of house they could buy pretty much, because then you would have to calculate it in the debt to income ratio. Okay. Common pitfalls that, that could derail a mortgage approval. What are some of the things that could derail a mortgage approval? Like opening a new credit card, buying a new car. What are some of the things that could go from a person having a pre-approval to not having approval anymore? Can you discuss some
It's
of that?
happened many times. A borrower goes out and buys a new car, and 10 days before closing, they do an update to make sure there's no credit that was run. Nothing new open. Lo and behold, they bought a new car. Their payment's $700 a month on the new car. They now don't qualify for the mortgage. That immediately disqualifies them. So when you work with borrowers, you got to tell them, do not open credit, do not take any more loans, don't do anything until the mortgage is closed and you own the home. Then go out and buy furniture. Then go out and buy a car.
So what about the money that's set aside for closing? They should also don't touch that money, keep everything the way it is in the account, because that's something that the bank is going to check also. They should not co-sign for someone else. That could be a problem too. What about paying off debt? Is that a good thing?
It's always a good thing if they pay off debt, but if you don't want to pay off debt with the money that you're going to use to buy the home, so then when it's time to go to closing, that money's not there. It's always a good thing to be able to pay off debt, but if you have money set aside for closing to use it to pay off debt, it's definitely not a wise idea.
Can they change jobs in the middle of the process?
That sometimes causes great problems as well. I always tell people, don't do anything until the loan closes.
Just stay home.
Stay where you're at.
Okay.
It's only, and especially in Florida, it's usually no more than 30 days. Closings in Florida are normally on or before, and it's normally 30 days out. Most of my deals that I deal with individuals buying homes are less than 30 days. They give you less than 30 days to close that loan.
Understood. At what point of the home buying process do they need an inspection, a home inspection?
You don't need a home inspection. It's always recommended, but you don't need a home inspection. And normally the seller's agent or the listing agent will allow you 3 to 7 days time to get a home inspection when you sign the contract. And once you do the home inspection. Then you can negotiate if there's things that are not up to par. It's always recommended to get the home inspection, but it's not completely necessary or even required, but it's always recommended.
So for the, yeah, I was just gonna come to you, Rob, because it's not recommended for the mortgage, but as far as the insurance part of it, is it recommended to get insurance coverage on the home?
Yeah, well, yes. In terms of the inspections, I think one of the biggest home buying mistakes that we see, because you'd asked the question earlier about things that happen that keep a closing from going through, and what we've seen first time home buyers do is wait too long to start seriously looking at what the cost of the insurance is going to be, and unfortunately what they'll do is they'll lean on someone else's expertise to say, okay, hey, the general range of how much the insurance could be on a home like that. And so when they get that number, because of their lack of expertise, they're not understanding. When you actually start to quote that when we start to actually look at that property and look at the characteristics and see how much that cost is actually going to be, we've seen the price go up 3 or 4 times as much of as what they were quoted as a number to consider for their closing costs. And I've actually seen it on several occasions where they can't end up buying the home because there's something wrong with the home and it's not insurable. Or in order to insure it, it's going to cost, instead of it costing $2,000 or $3,000, it's going to cost $9,000 or $10,000. It's just enough to push outside of their DTI, range that they need to stay in to qualify for the loan. And we've seen that happen. So going back to your question about inspections, I mean, yeah, the sooner you can get the inspections, the better. Oftentimes you can even go to the seller and say, hey, maybe they have a copy of an old inspection that you can see that we can at least use as a guideline. I mean, obviously they're going to want to get something up to date, but any information that we can get on that property to keep any surprises from happening. And those inspections that you're mentioning, the sooner we can get those, and I'm talking about the insurance inspections, not the home inspection, the specific insurance inspections, a wind mitigation or a 4-point inspection, which are pretty common. The sooner you can get your hands on those, the better. So you know what you're looking at when you're going to purchase the home.
Yeah, I always used to recommend that the home buyer get an inspection because sometimes there's repairs that are not seen with the naked eye that an inspector could find, and you don't want to close on a house and then walk in and say, "I didn't know there's mold," or "I didn't know, there's a crack in the foundation," or whatever it is, which could be a big problem after you close because you already bought it. So I always recommend that they get an inspection like Bruce said, within the first 7 days, just to get that peace of mind and just to have all the facts. So the typical closing takes about 30 to 45 days, correct? That sounds about right from start to finish. Once they found a house, they get a contract to close in normally 30 to 40 days, correct, Bruce? Marcus, was there something?
Yes, yes. Can I add something about the inspection? As a general
Sure.
contractor, I have a lot of customers coming in. They just bought a condo or a house, and after they close, they move everything, and they got a code enforcement drove by the house and got a violation. So let's say you buy the house with the nice windows, impact windows, everything nice paint. You fall in love with the cosmetic, and after the fact, you have a code enforcement stop by your house and put a sticker that you installed the window without permit. And you didn't because you just buy the house a couple of months ago, but you still the responsible for those window permit. So what I will recommend also for the inspection, since it's a public record, you check the house. If you haven't, usually when they flip the houses and put it back in the market for sale, some people don't put the permit requirement. And then they said the buyers get involved in the cosmetic and buy the house, and then they are responsible for those renovation that was no code and they had to pay for it. Recently, I have a customer, he called me and said, "Hey, Marco, I just bought a condo." "Oh, great, congratulations. Why you don't come over and take a look? I have some details I want you take care of." I realized that he had to change the electrical panel because this was, no code, and that was dangerous. So that cost you $10,000 that he don't expect to spend, and that's why he missed the inspection or the inspector didn't look at it. So I would really recommend the inspection. Even the windows, it is very common. We have a lot of call to pull permits after the fact to
Mhm.
legalize the windows. And that's a very serious problem because the buyer don't expect to spend that money.
Mhm. So can the seller be liable for that
Yeah.
issue? Can the seller be? So after the fact, can the buyer go back and
Yeah,
pursue the?
you can pull the permit after the fact. The inspector
Mhm.
come over, the city inspector come over, and they had to approve. If there is something that is non code, you had to fix it, or sometimes you had to tear it down because it's more expensive to put it up to code than do it again. Sometimes that's pretty much happen with the back patio pergolas. That's people nobody see them and they redo the pergola, the decking, very nice. But some inspector realized that they was working there, and they when as soon as the code enforcement passed by your house and they notice that you guys do something without permit, they start digging, and that's serious because that's the money that the buyer doesn't realize. Some realtors don't know that, but the seller know that they renew the house. So as a buyer, if you represent the buyer, I will recommend with the property address, you can look on the public record if they put the permit to do the renovation.
Mhm. Okay. A lot of times on the title search, you could see. Hopefully, they show all the permits that were pulled, whether for the roof, for the AC, whatever it is. But the title search should show all the permits that were pulled. Now, cost wise, right? This is obviously would be a big cost to the buyer. But can the buyer pursue the seller for damages in that situation?
I can tell that. I can tell that. I don't know if you sign up with you
Mm-hmm.
guys in the panic.
You ever seen that before, Bruce?
I've seen everything. So they could try, they could it's everything's a negotiation. So I mean, buyer beware a lot of time. Buyer beware. Buyers got to do their homework. Situations like that, it's difficult to say. You
Yeah.
know,
I'm gonna
You know,
just
it's go.
add just a little bit to this, because sometimes what happens is, just to piggyback on some of the things that Marco said, if you are able to catch the remedy that needs to be done, what can happen is funds can be held back in escrow until they're corrected. Right. So before, let's say the new homeowner, hey, I know what the issue is. There is an outstanding permit. There's going to be a holdback with the escrow funds for X amount until it's remedied. And then when it's remedied, it gets released, or you guys will negotiate what the terms are of the fix. So I've seen something like that in remedying stuff that was outstanding for work done without permits, etc.
Mhm. And it's interesting because in Florida, I started real estate in Illinois, and buyers in Illinois have to have an attorney to represent them. Here, you can buy a house without an attorney, but for reasons like that, where the attorney would, if you do a seller disclosure in Illinois, it's about 50 pages thick, just disclosures like, hey, did you change this? What did you do? So on and so forth. I don't normally see that in Florida, but in Illinois, 100%, you have to have an attorney to look over all the paperwork. They put together the contract, and they actually are there at closing to help to explain all the paperwork to the homeowner, because the title agency that closed the property is actually not supposed to explain the documents. Oftentimes they do, but they're really not supposed to, because they do not represent the buyer. So a lot of states like Illinois, and I think a few others like Maryland and so on, you have to close with an attorney, so to prevent issues like that. So that's interesting.
Marcel,
Uh-huh.
just kind of along these same lines, I'm thinking in terms of a new home buyer and just not having the experience and understanding like what happens when a home has a claim on it. But speaking of, we're talking about disclosing things on the property that may have not been disclosed. We've seen it, and one of the services that we provide for first time home buyers, but also for real estate agents or whoever we're working with, is we can actually run a claims report on a property, and we can find things, and we have found things in the past that are not being disclosed, in any of the documentation, where there's been a huge claim, major water down, damage or foundation issues that are not being disclosed. But if a first-time home buyer, if they're doing their due diligence, they can get those reports ahead of time and say, so they can see exactly what it is they're getting ready to purchase. Especially here in South Florida, where there's a culture of it's not, sometimes it gets a little murky down here in terms of people being honest and transparent with these with anything that they're trying to sell. So we recommend that as well. So because you never know what you're buying.
Awesome. That's a good point. So for Sam and Marcus, this question is for you. So you have heard the traditional way of somebody getting their first home. What about if I wanted to build my first home, or I make it customized and so on? What's the difference between going with, or is there a difference between going through Bruce or coming to you guys for a development? How does that work?
So one of the things that I think that you should do is you want to get a contractor into the property early, right?
Mm-hmm.
So you want to get a real number. The inspectors will give you a number range of what things cost, but because the contractors are dealing with this, day in and day out, they'll be able to give you a realistic cost on what it would cost to do some certain types of repairs. But if you are going to undertake a large scale remodel, I have a philosophy of live in the property first, right? So I would say go in, do the floors, because the floors is the messiest process. Find a neutral palette that works for the style in which you're turning the home into. And then if we could figure out the paint colors on the walls, live in the house, let the house speak to you and tell you what it actually needs. And the reason why I suggest that is you want to give yourself a chance to create the highest and best value, right? So a lot of times people come in and they quickly renovate the home. That leaves you open to making sloppy decisions and decision-making on selecting the right contractor, which is a big deal down here, and making sure that you have the right contractor to do those repairs for your home. And I'll tell you a quick story. I wouldn't be in this business if I didn't have contractor problems. And so on my first flip, I hired a contractor, I fired a contractor, hired a second contractor, I fired that second contractor. And then on my third contractor, I was able to get through the project, but I learned a lot of lessons in that process and understood that, hey, listen, this business has contractor problems, right? So understanding that there may be a challenge in finding the right contractor, moving carefully is a recommendation that I would highly make to any first time.
So, that's understandable. But how would you choose the right contractor? What are some ways to choose the right contractor, or or a way to kind of increase your chances of choosing the right contractor?
So one of the things that I've done, because I've also hired bad subcontractors on my job site, which hasn't happened in several years, is because you have a filtering process. And one of the things that I do is I utilize a questionnaire, and the questionnaire is pretty in depth. Ask them their name, their address, recent jobs, insurance, getting that policy put in our name, getting references. And what happens with that, and anybody could utilize ChatGPT now to put together a questionnaire for the contractor. It does two things, right? So one, if the contractor is unscrupulous, it scares them, right? There's a lot of information going out on this project, which is advantageous to you as the new homeowner, right? So it scares them, and they might back away from that. But the other thing that it does for me and other people is they can successfully do the first task, right? You're asking them to jump through hoops, get your insurance, get this paperwork to me, get this paperwork. And yes, everyone is busy, but by successfully getting that back to me, or the homeowner gets that successfully back to them, then you know that, hey, listen, they could successfully complete the first task. So let's move to the next step. So that's one of the ways that I've utilized the questionnaire to be able to kind of filter through who's a good and who's a bad contractor.
Is word of mouth referrals always good? Like somebody I've worked with this person before. It's Angie's List. I've heard of Angie's List of different websites like that where they have 5-star reviews and so on and so forth. Is that a good way to go about it?
Feel free to jump in at any time. But so word of mouth is big, but what I've also seen is two things. Sometimes people will not pass on the word of mouth unless it's solid, which is a very good thing. But a lot of people don't have the point of reference sometimes in the word of mouth of passing your name along. Maybe they didn't do the work with you. So sometimes that's a little bit challenging for a home buyer, even getting that word of mouth, right? So you want to ask questions like, did you use this person? What was their experience, and what were the references attached to that? So as long as you could get that kind of information and not just, hey, it's my brother's cousin that does, drywall and he'll take care of you, right?
Awesome.
Things that doesn't allow you to get a real sense of who that.
I want to add something.
Go ahead.
I'm very agree with Sam say about the functional of the house, because some people just buy the house, champagne, I want to remodel. I want to take this wall down. I want to do this kitchen like this. I want to do the bathroom. Sometimes they are not really functional. So our challenge as a contractor, my wife, she's an interior designer and she works with the spaces, is this functional for that family? What that family needs. They have, they are fine in the family, they are meet in the kitchen, they meet in the living room. They have to make it functional. That's a challenge that we have with the customer, with the homeowner. We have to ask them what they really need, what we do, what kind of job they have, because those are the little things that we can implement in the workspace. Maybe they have work from home, or they are part-time, they have small kids. This everything, that we had to ask them. So in order to make the house functional, no champagne, because I know that some of contractor come and say, what do you want to do? I want to do this and that. And the contractor will go and do it, but it's not functional. And the family, after the fact, they say, he did this for me, but it's not really what. That's what you asked for it. That was you asked for it, and you pay for this, and the contractor did what they asked for, but it's not really what they need. That's a challenge, for if I'm a homeowner looking for a contractor, I will get 2 or 3 contractors, and who is the more reliable and trustworthy, because sometimes I have people come in, I want to do the kitchen like this, I want a big island. Listen, you don't have space for the big island.
Mhm.
The big island is not going to work on your house. You don't have room to walk around the island. So this depends, all that spaces and everything. That's important when a homeowner meet a contractor. I believe they choose a contractor that make you more question about it. No, whatever I want to do this, and the contractor agree and give you a good price. Sometimes not a better price is the most effective contractor.
One piece of advice you would give to every new buyer. So one piece of advice you would give to a new buyer.
Let me jump in. The first time that I'm going to be contributing. Yeah. So in my lifetime, me and my wife, we have acquired multiple properties, and that has been on the personal side. And I've realized that, and especially in Florida, that there's so much to choose from sometimes. You need to come up with a list of your must have and you would love to have, in a sense, because it'll be almost impossible to find a property that will have all of the items that you're looking for. So knowing what exactly is required for you to have on your new property is extremely important, because you may have to give up some of the items that you were hoping to have but are not available. So that would be my piece of advice.
Bruce, what's your biggest advice?
Make sure you look for a home that you can afford and do not go over your head. Be comfortable with your payment. Know that the taxes will go up. Get qualified, because it's the biggest financial decision of most people's lives. So make sure you're comfortable with the payment based on the current interest rates, based on the terms of the loan, your credit. So I would advise anybody looking for a home to make sure they speak to their accountant, speak to their spouse, and make sure that they're comfortable enough knowing that the rent that they're paying now of say 2,200 is going to be now a 4,000 a month mortgage. So comfortability in the financial aspect is very important.
Awesome. All right.
I'll hop in here. All right, so I got a couple things. Vague doesn't work to your advantage, right? So if you get a scope of work document, right, and it has vague language, and this is where people typically get tripped up, where they don't fully know or understand what's in the scope of work, or the contractor has vague language or things like contingencies inside of your selections. You want to avoid that kind of stuff because that has the opportunity to escalate your project costs, right? So, and then if you can select all finishes in advance, right? So then now you're getting hard numbers on your pricing for flooring, on your pricing for your materials and stuff like that. And if you could order in advance, all of those different things will help you keep the price solid and doesn't allow it to escalate on you as you move forward in your project.
Awesome. So be as detailed as possible and pre-plan your materials.
Yeah.
Okay.
I can jump in next. Yeah, so I'd say that my biggest advice is not to treat the insurance as something that you're going to buy simply because the lender requires it. There's lots of times when you're buying insurance because a first-time home buyer is not in a flood zone, for example, they don't buy flood insurance. But trust me, when the rain starts coming down, the rain doesn't care what flood zone you're in. You have to be aware of these things. And remember that you're protecting, as a first-time home buyer, they're protecting probably the largest asset they're ever going to own. It makes sense to take some time to understand the coverage, understand deductibles, understand what isn't covered, and involve your insurance professional, somebody that you trust. If you don't have the time to do these things, work with somebody that you do trust, that you know is knowledgeable and competent to be able to advise you. And understand that really as an insurance professional, our job really begins once you buy your home. Most of the other ancillary services that go with a home buying, whether it be mortgage, whether it be title, even the real estate agent, they're with you until you buy the home and then they're gone. The insurance agent, I have relationships with clients for 10, 20, 30 years for the length of the mortgage. And so it's important to pick the right person, understand that the insurance is more about than just trying to save money and check off a box. It really is one of the biggest parts of the purchase. It makes sense to take the time to get to know who you're working with and work with somebody who's competent and been in that area where you're buying your home for some time and has the expertise.
Mm-hmm. All right.
That's me. Well, but I believe the best advice I can give them is don't fall in love with the cosmetic. Understand the structural, plumbing, electrical, roofing, all those issues if they have it. Understand if they're gonna get into renovation. Understand exactly what they get into, and also understand exactly what they buy, the insurance, the payment, the mortgaging, understand everything because they have to be clear what they're gonna get into so they don't make mistake and run out of funds. That's the most important thing that people sometimes do, buy a house that they cannot afford, and they get into the renovation, and after they get into the renovation, they don't have found to finish it because they find things behind walls or all that kind of things can happen. So understand what they buying and understand renovation if they're gonna do it.
My advice I would give to first-time homeowners is start as soon as possible, right? I started buying homes, in my early 20s. I was fortunate to do that, but I learned about real estate, not just buying homes, but plazas, different things like that. And the reason why it was so important because of wealth creation, as far as having a legacy to leave on, but also the price of rent. Renting for a year, 10 years, 20 years when you look at what you paid in rent, if you had put that to you can't get that money back. So I think just starting as soon as possible. And Bruce, you could correct me if I'm wrong here, but I think for up to 4 people can be on the same mortgage. So even if somebody's a college kid or they're just starting out, you could have 4 different individuals on one mortgage to help get qualified. So I think just starting as soon as possible would be my advice. And the first home doesn't have to be the last home. The first home, the average time a person spends in the first home is 5 to 7 years, right? So the first home is a good starter where you build up your credit. You understand about home ownership as far as repairs, maintenance, insurance, taxes, and also with the IRS, how do you file and so on and so forth. So the first home doesn't have to be the last home, but starting early and getting into the home ownership space, I think is very important. What's one of the biggest misconceptions about buying a home?
I would
The
say
biggest misconception of buying a home is people feel it's an asset. It's totally not an asset. It's a liability. And most people, unless you're buying an investment property that's producing income, it's a liability, and you have to be ready for one of the biggest debts that you ever had. A lot of kids, you talk about starting early. A lot of younger generations now do what they call house hacking, and the small kids are buying homes when they're young, and they're renting rooms to their friends, and they're house hacking. And it's a great way to start. I work with a lot of investors across the country, and it's a great way to start buying homes and getting into them. And but just remember, unless you have that house is producing income, it's a liability. So get ready.
Okay. Who else? Biggest misconception about home buying, Robert? On the insurance side, the biggest misconception.
I think as I've seen with a first-time home buyer is not understanding that the amount of money that you're paying when you first buy that home is not going to be the amount of money you're going to be paying once you get into that home for a couple of years. And we talked a little bit about what happens with the taxes that often get paid out of the escrow along with the insurance. And those numbers usually just go one direction and it's not down. So especially in Florida where the insurance rates have gone up exponentially over the last few years. But I think to balance that out, Marcel, like what you were saying, see the home as an investment, see it as it's not a forever home, especially for a first-time home buyer, maybe after your second or third home, and looking at it like that, understanding that there is some liability with it. It's an asset, not getting so married to it. And sometimes we fall in love. I think Marcos was talking about falling in love with a house right when you see it. You just want to be wise, take your time, but realize over time that house, the cost to maintain it and keep it is going to go up. So just be prepared for that.
I would say that you can think that if you can afford the mortgage payment, you're good to go, because there's so much more than that. A home sometimes brings along a lot of additional expenses. Even if you don't have an emergency fund, and then there's some sort of repair that you have to fund out of your pocket, then that can turn into a nightmare. And along those lines, thinking about insurance, you cannot think that, okay, so I'm covered. That means that they're going to pay 100% of my claim, because especially when you look at hurricane or windstorm losses, there's a deductible and it can be pretty hefty. It could be, I don't know, 3%, 5%. So it is something that you have to be mindful of, that if you have a loss, and even if the insurance company pays for the loss, they won't pay each and every penny that you lost there. There's some sort of cost to you, and you have to be mindful of that and make sure that you make provision for that.
I mean, one of the things that I see, and this probably could touch on insurance, this could touch on, definitely touches on construction, because we talked about escalating expenses, is we all do the same thing. So let me just go with the cheapest price. Right. And we know how that could be a complete pitfall, whether it's selecting your insurance, whether it's selecting the contractor. The thing about the unscrupulous contractors that want to take advantage of you, they know that you want the cheapest price. And so they will intentionally come in low, and then the homeowner goes for it. And then that's why contractors have a bad reputation. Right. So that kind of stretches not just in construction, but it stretches when you're dealing with insurance and different items connected to the home as well. So the cheapest is not always the best decision for you.
Yeah, that's absolutely true. I think also another big misconception is that you have to have a lot of down payment. There are programs out there like FHA where you could put down as little as 3% down on the house, right? And then a lot of times a person could receive a gift as far as a gift towards the down payment. And there are a lot of homeowner assistance program out there, especially here in South Florida, Tri-County, West Palm, Broward-Dade, where they'll offer up to $50,000 to help with the down payment. So that's one of the misconceptions. Somebody say, "Why don't you buy a home?" "Oh, I don't have any money to put down," but they're thinking they have to put down maybe 20, 25%, but you could put down as little as 3%, and you could get assistance with down payment and closing costs and so on. So I think that's one of the biggest misconceptions that I've seen that have kept people out of the market. So I just wanted to put that out there. Next week, I want us to discuss property investment. We spoke about home buying 101, what it would take for a person to get in a house. But next, we're going to talk about, is real estate still a good, viable option for investment? And if so, what's the best way to invest in real estate? So I want to dive into that next week. I want to thank everybody for coming out today. And this video is going to be out soon on our YouTube channel. And anybody want to reach out to us, we're gonna edit this video, of course, and we're gonna put some information at the end if you want to reach out to us as far as buying a home, getting insurance, or building a home, or doing repairs on a home, and so on. We'll put the list of service there at the end of the video. You can reach out to us, and we'll be here. We'll be happy to help. So thank you, gentlemen, for coming out. Thank you, Maria, for co-hosting. And I'll see you guys next time on the Real Estate Call.
Thank you, guys.
Okay, take care.